So I thought I might start by just explaining a little bit about Legal in General and what we do and who we are for those who are not familiar with us. And I won't go through this in with too much detail, but just to give you a feeling for who we are. We are a leading provider of financial services across the globe, particularly insurance and asset management. We provide insurance services and have been doing it for more than 180 years. I'm always staggered to see that on a slide. And we have 10 million customers globally. We have about $1 trillion of assets. It makes us the 11th largest asset manager, to be precise, globally, which is something we're quite proud of. And particularly focused on Europe. You'll see we've got lots of little umbrellas, which is our symbol across the different areas in Europe that we have a presence, both from a fund registration perspective and clients. Our heritage is very much UK institutional, but we have a growing presence in the EU as we've kind of leveraged that institutional presence in the UK more widely. So we've got about 47 billion under management for EU clients. Another quick stat is 145 billion, which is the AUM that we have in EU domiciled funds. And I'll come back to that later in the context of the CMU conversation we're having today. I think the key thing to take away is what we are trying to do, and I'm probably going to take a slightly different tack than some of the other people also, is try and give the client's perspective, because everything we're trying to do in what we, as a business, is trying to provide investment solutions for our clients to kind of help them meet their goals. So I'm going to take a client-focused view on CMU, if you will, for the next kind of 10 minutes or so. So the typical conversation we have with clients, it focuses on institutional investors, but also on the retail sector. Most of our clients have a very long-term focus, and that's because the institutional side of things, their pension schemes, the retail side of things, they're often trying to save for something like a child's education, etc. So it can mean that we have to look at both short-term asset concerns and market particular considerations, but also the access to long-term asset classes that provide sustainable risk-adjusted returns for our clients. And we do that across a wide range of different things. I wonder if we could flip to the next slide, please. Thank you. And just to give you another feel for the kind of wide-ranging remit that we tend to give ourselves as a business, our purpose, which is the purpose of the whole company, insurance and asset management, is to deliver outstanding value and securities for customers, a sustainable growth for shareholders while taking a leadership role in the broader economy, and provision of socially and economically useful products and services, which is quite a statement, but we take it very seriously. And the drivers on the right-hand side are key drivers when we look to grow our business. Now, in the context of the CMU conversation, there's a lot of key things in here, which are, quite crucial in terms of our growth prospects and our growth ambition in Europe, in terms of being able to access the right types of assets for our clients. There's some kind of probably less relevant things in here, but quite interesting things in that, we provide quite a lot of today's capital. Being an insurance company ourselves, we put that to use to try and create sustainable, real, productive assets. And I'm not sure many people be aware, but we actually build homes in the UK. We have an L&G homes business where we build houses. But the crux of that is we believe in providing our clients with long-term sustainable investment returns, and we are very much focused on sustainability, environment, social and governance aspects of our investment strategies for clients, and therefore we see ourselves as a leading ESG provider, which I know was a topic that was brought up on the last panel discussion, particularly in the context of sustainable investments for CMU. So coming back to the topic particularly, if you could go to the next slide for me, please. Concentrating on my customers, there's kind of two angles to this. When I go and speak to my clients, what do they ask me for? And then in turn, what do I need in order to be able to provide them with that ask, if you will? So at the top level, a lot of our clients, as I mentioned, are pension schemes, but also, if they're not pension schemes, they're still looking for long-term returns as part of their saving ambition. So we're looking for security and stability of investment returns for people particularly in retirement, and this is a pension scheme example, I suppose, and helping those members save for retirement, be that somebody who is currently 20 to 30 years away from retirement and therefore needs to maximise the pot of assets that have available to them, or somebody who is at retirement and needs a stable income throughout. In order to be able to do that, then, we need open markets that allow best-in-class investment solutions. And so that means that we need access to a wide range of asset classes, particularly in the last decade, where we found ourselves in a period of very low yielding assets, and particularly at times of particularly stressed liquidity, which I know we've already talked about also, and we're facing increased cost pressures from our clients. So there's three key things there that we need to think about from a provision of solutions, which comes back to some of the key themes that CMU are trying to achieve also. So from the client perspective, if CMU works, then it allows us to provide better solutions for our clients, and in turn, better outcomes for our clients. And I think the key thing here is the asset class side of things, and the access to capital markets working very smoothly. We've talked about the post-Brexit side of things, and I'll come on to that in a little bit. But I think the EU capital markets is one piece, but we always think about things in a global context. We're a global firm. We have portfolio managers in Europe, we have portfolio managers in the US and in Hong Kong, and our clients expect that access to global markets, and the structures and ability for the EU capital markets to work to provide that access to global markets is key for our business and for our clients to be able to provide them that solutions. Next slide, please, if you could. Oh, it's super, it's working now, thank you. Great, lovely. And so, that point there in terms of the security and returns for retirement income, particularly in this example, we have a very long-term perspective. We have that kind of 20, 30 year plus kind of objective that our clients are trying to achieve. And so, we need to think long term. We need to think about sustainable investments. We need to think about long-term investment yields. And when we're thinking about those sorts of things, we're thinking about it from an investment context. How do we access sustainable investments? How do we access companies that are providing equity or debt, etc., which have sustainable goals in mind over the long term to provide the right investment outcome for our clients, but also in the context of where society might go in future, climate change, etc. And I think there's a few pieces in here in terms of our relationship with our clients, which I think is quite important from a transparency perspective and from a trust perspective. We have to deal with our clients in a very straightforward manner. We have to deal with them in a way that they can have confidence in us to manage the relationship with us over the long term. And I think clarity and consistency that the CMU might provide in terms of the regulatory regime which we might operate in, and the potential of the EU capital market integration would help with that long-term mindset that our clients have typically. And I think that kind of that goes to the point that we need rigorous risk frameworks, we need rigorous regulatory frameworks, we need rigorous processes internally in order to be able to make sure we can instill that confidence in our clients that we can do this over the lifetime of their investments, the 20, 30 years hence. Perfect, we're working. And so just thinking a little bit more about open markets that allow best-in-class investment solutions. So what we're talking about here is asset managers, both in the EU, and Jack very kindly pointed out at the beginning that I've just set up our Dublin office, which is our EU hub, which is a Brexit-related change that we've made as a result of the vote back in 2016. I think there's kind of some obvious things that a global asset management structure, and particularly where people are coming, or companies like ourselves are coming into the EU, that supports direct economy. We're hiring new staff in the jurisdictions. We're contributing to indirect things like services, where we have people flying in and out all over the place. So there's a general kind of direct and indirect booster to the economies that you're setting up in as an asset management firm. But I think the key, or the more key point in this slide has to do with the delegation piece that was recently announced by ESMA and the FCA, and we're very grateful that we have, as an asset management industry, and for L&G particularly, that we've kind of got to a point where everybody has clarity on that. So that's a fantastic outcome from our perspective, and we're very thankful for that. We should say that from a global perspective, because asset management firms as a whole are operating on a much more global scale. Our clients, if you take, have a German investor who invests with us for a global credit mandate, and that global credit mandate, they need to be able to access our subject matter experts for their skill and expertise in the UK, in the US, in Hong Kong, and they'd expect when you're trying to get global credit mandate in its entirety, and finding that key skill and balance and expertise, that you go to the relevant area where that expertise exists. And so the power of delegation allows that. And I think the key thing from our perspective is making sure that that continued delegation in a consistent fashion, both when the UK leaves, particularly when the UK leaves the EU at the end of this month, is going to be key to continuing to have the EU as a kind of equal playing partner, if you will, in the global asset management world, particularly. And we've talked about the fact that the UK is going to become a third country. I think it'll be even more important that we have a consistent treatment across the third country regimes that we have, or the third country partners that the EU has often had very, very good relationships with, and maintain that relationship with the UK as we move forward into this new era of the UK becoming a third country. And it's interesting, as well as obviously the uncertainty that we're facing at the end of this month. We've seen lots of temporary regimes coming out over the course of the last kind of 3, 4, 5, 6, 7 months or so. The UK still allowing the EU funds to be able to market and distribute into the UK, I think, is a big step for EU capital markets and the EU domicile fund structures that we use. And I think that type of relationship is kind of key to making sure that the EU funds business stays at the forefront of the global funds business that we have developed, because there's a huge positive brand globally with the UCITS brand, for instance, and that plays very well with our investors in the UK, in the EU, but further afield, in Chile and South America and Asia, etc. So that's quite a powerful thing to maintain. And I think the other thing from the side of things is that we obviously know we've got to get across what could be a particularly cliff risk point, particularly for our clients, and our clients are asking us lots of questions about, what happens on the 29th of March, what we do, etc. And a lot of the emergence of temporary regimes to allow UK firms to continue to operate on a temporary basis is helpful to smooth that transition. But I think there has to be a recognition that as we move out of that temporary regime, that we bed down the EU capital markets and CMU regime, so that EU investors can be comfortable in what is the new norm. And then last but by no means least, we've got a few things on the list, and I've covered a few of these already. Capital markets working smoothly, particularly on our list from an asset management perspective, cross-border distribution of funds and services. We have 145 billion of EU funds and services, so getting that right in a CMU context is really quite important for us. But we've talked, and a lot of panelists have talked about European supervisory financial system, looking at the different regulatory regimes for asset management firms. I think all of that it would be good things to do and to look at as part of next mandates, etc. I think PEP particularly is quite a positive thing for us from an asset management, but also from an insurance perspective. We see this as a really useful tool for consumers to add to state pensions and occupational pension schemes as another layer on top of it. And obviously we realise that there's lots of feedback in that, and there's a need for consistency in certain country considerations, but there's also a need for transparency. There's a need for consistency across the whole EU to get this right and have it be a really powerful tool for the masses. And I think particularly if we get the cost structure right, then you could have, back to the investment solutions I mentioned at the beginning, you could have really market-leading investment solutions to help people save for that retirement piece that I think is quite crucial. And I know there's focus in different jurisdictions around things like auto-enrollment regimes, etc. So tying it all together, it seems like the right sort of time to do these sorts of things. And we've talked a little bit about investment firms, and I mentioned ESG, so environment, social, and corporate governance side of things, which is a really key area for us as a firm. We've recently launched particular ESG type funds because the focus from our client base has warranted it. A lot of our clients are looking for sustainable investments. They're looking for that long-term ESG type investment to not completely to remove the need for investment returns, but to complement it and do it in a way that's long-term, it's thematic, and it'll be sustainable. And I think that's going to be a key theme for our clients going forward as well. And then last but by no means least, the EU working as part of the global market. We've talked about this a little bit already. there's no getting away from the fact that markets are interconnected and markets are global. And the only way we can operate as a global asset management firm is if we make sure that, we can manage this 24/7 multi-jurisdictional investment markets that we act in all day long. So that ability to have the EU as part of that key global markets, the regulatory frameworks reflecting that global nature of the asset management business is going to be crucial to the success, I think, of retail institutional investors having access to the right investment solutions for themselves. And there's various things in here in terms of the potential for equivalence, and we've talked a little bit about third country players coming in to operate in the EU. And I think one thing that could be looked at potentially is the equivalence regime, and just refining that to kind of help some of the third country managers in this kind of new world that we find ourselves in, particularly where the UK is going to become a third country, but also for other third countries we've dealt with before.